In just a moment, we're going to visit with Todd Horwitz. First of all, the numbers right from the trade. Over in the corn market, we're coming back just a little bit from some of the earlier lows. Earlier low of 305.5 on the May. We're at 308.25 now, and we are down 3 1/4 cents. December down 3 3/4. It's trading at 333. Soybean market off of the lows here as well. 833.5 on the May contract, down 13 3/4. November down 11 at 844. For the Chicago wheat market, the July contract is the one we're watching closely here. It's down 3 3/4 at 288. That soybean meal here. Just a minute, that was my fault. Let's go with the wheat market here. There we go. July is up a half at 517. Now on to the wheat market. We are on the higher side with the deferred contracts. July up 3/4 at 483 3/4. And in the spring wheat, has it turned around? Not quite yet. July down 1 1/2 at 505 1/4. And the cotton market today, on that nearby contract of May, we're down 150 points. December's down 151 at 56.01. So now let's visit with Todd. First of all, Todd, I get a text message from you every day, kind of an update on the markets. And I was reading your text earlier that you said you still had some concerns about the grains, especially when we're down here at these levels.
Well, John, I think what's happening is we've got to hold these lows that were put in a couple of weeks ago because, it looks bad, and we're in such a bad shape right now with so much oversupply and nowhere to go, right? I mean, we're seeing a lot of problems now. If we can get the economy open and get business running again, then hopefully we can relieve some of these oversupplied conditions, which is one of the things keeping these prices down. You look at the overall market, and it's been under pressure. Now, again, as long as we can hold the lows, we may just consolidate here on the bottom level here and then get ready to move. I mean, I wouldn't be surprised if we saw action very similar to what we've seen in the meats, where they kind of bottomed out and kind of held for a while and are now starting to work a little higher. So I would look for that kind of action, but there are concerns, and I'm not a fundamental guy, but the fundamentals at this moment are not very good.
You know, you talked there about watching this market a little bit. Are there certain signs that you, Todd Horwitz, watch for to see if a market is close to a bottom or maybe showing some bottoming action before it gets ready to go to a higher side?
Well, yeah, John, there's a lot of things you watch in markets, and one of them is the liquidity, which we've had very little right now. Liquidity is lacking. Volume has been light, so that's okay. You know, usually when a bottom gets put in, it is on heavy volume, which a couple of weeks ago when we made the bottoms, it was on heavy volume. So that could indicate the bottom is now. So now we're just watching. There's different phases the markets trades through, and the first one, or the birth of all markets, comes from congestion. So if we are consolidating, which I think we are, then we will eventually break out again, and hopefully it'll be this time to the upside.
Okay. Outside markets, are they going to play a factor in this? And I'm particularly talking about that fund money that would come back to the market, thinking that maybe it's an opportunity.
Well, I think it may, but right now, even the big markets and the active markets are not active. And this is the overall issue, John, in everything. There's a dramatic lack of liquidity everywhere, which is why we're seeing so many dramatic swings. You know, volume has kind of dried up, and we're still, the equity markets are still kind of playing that free money type trade. And again, that will fail. Eventually, these statistics and these fundamental things have to come into play at some point. And I don't know how much longer they can hold up. So once they just start to realize that those are not very strong, I think that money will flow back into the grain markets as we get those open and running.
Todd, earlier you mentioned the rebound in the meat market, and we're going to talk about that. And let's touch on crude oil also when we come back with Todd Horwitz on the other side of this break here on the Market Day Report. Todd and I were talking a little bit about the rebound in the livestock market. Let's look at what's going on in the live cattle market here first. That front month of June is up 60 at 87.85. Over in the feeder cattle market, we've got a rebound going on here. We're up 92 at 118.75 on the May contract. All of those contracts on the higher side. And talk about a big move. $4.60 right now on the May contract with lean hogs, 67.47. As you go down the line here, 225 higher in the June, July up 90. Todd, this goes back to what you were talking about a little bit ago about the strength coming back to the meats. probably, well, is it too early to call a bottom over here yet?
Well, I think the bottom is in hogs for sure. Again, I think hogs look great. In fact, we turned very constructive last week on hogs and started to accumulate again. I think that they look terrific, and I think they're going to go. And again, I wouldn't be surprised. You know, you've seen a little weakness once they got up almost limit. They came back a little bit today. Cattle is still a little bit questionable. And again, the big key here is we've got to get the slaughterhouses open again, because we're having, you know, obviously you continue to build inventory. You got to feed those things. You got to get them out, and they're just not obviously not moving because we can't get them to slaughter. So, but I think it will work out. I think we're going to be okay, and I do think the bottoms are probably in, but I don't know that we'll see that bigger rally you want right now. From a technical spot, we're kind of near the upper end of resistance. So a small pullback wouldn't be surprised. But again, same thing in these markets. If we can hold the recent lows, I think we'll be very solid, and I think we can expect a much bigger rally down the road should everything hold. One
of the other markets that's possibly looking for a rally is that crude oil market. You know, that June contract there, it's really followed what happened when May went off the board, although we're up 20 right now at 19.98. Same thing for the crude oil market that we saw in the meets. We just got to get everything back to running in the United States.
Well, yeah, and be very careful with crude if you play with it, because, again, the June contract could certainly go negative as the May contract did if there's a delay or if something happens with the economy and we have to shut it down again. But if everything is good, I think that the bottoms are probably in the crude oil market. I don't think we're going straight up, but I do think that you will start to see a rally. And I think the key for anybody to watch is the spreads between the different months, because right now, last week, June, July was about $8 wide at one point. It's now about $2 wide, which tells you that the markets are getting more constructive and having more belief that they're going to go and work their way back higher, and there is some salvation coming shortly. So I think that looks good, but if things change, we shut down, you could see a problem.
Great visit, Todd. Thanks a lot. Have a good afternoon, and we will talk to you again the same time tomorrow. Todd Horwitz with Bubba Trading right there. Christina with the very latest from the market desk.
Thanks.